Those are the headlines we've been tracking for you this evening. Global market intelligence platform Tracxn recently released its Tracxn Geo Annual Report, India Tech 2022. Now, the report provides a detailed overview of the Indian startup ecosystem by delineating funding activities, investor exits through acquisitions and IPOs, and wider trends in the fundraising landscape. To elaborate on the key highlights of the report, joining me now is Tracxn's co-founder, Neha Singh. Also joining me is my colleague, Arundhati. Neha, welcome to Startup Street. Now, 2021 was a record year in terms of funding. It was a boom year for startups and VCs. While 2022 started off with a bang, the amount of capital and funding rounds started dwindling. Your report shows that the number of funding rounds has seen a drop of 30% compared to last year. Neha, what led to this significant drop in funding, and by when do you see the funding winter getting over?
Thanks so much, firstly, for having me. So yes, as you see in the stats, this year was fairly slow as compared to last year. So both the funding was down 35%. Number of rounds was down 30% as compared to 2021. The decline had started happening from Q4 of 2021, which is in line of when you saw the decline also happening in the public markets. And across all the quarters, you saw the numbers actually keep coming down. And that's one of the reasons why, because of the interest rate, what impacted the public markets, you also saw that impact in the private markets. And coming to the second question, which is, when is, has it bottomed out, and how does the outlook look like? So there are good early signs. So if you actually look at the Q4 data, it looks like, across all the quarters, the decline was continue to happen. And Q4 looks to be flat, like in line of, slightly more than what the funding had happened in Q3. So there are some early signs that it looks like the decline has stopped and probably it has bottomed out. Most likely it is going to be sideways for a few more quarters, but you still have to wait and watch and see if any macro new situation is going to emerge, yes, which might impact this. But it there are good early signs that it looks like the decline has sort of stopped, but it'll probably be muted for the next few quarters.
Okay, all right, good to hear that, Neha. But one of the key highlights also is that seed stage funding, despite seeing some amount of contraction versus the previous year, did better than late stage funding. What was the reason for this, and will we see seed stage funding grow even more in 2023?
So that is correct. If you compare the seed stage versus the late stage, in the late stage, you saw the impact to be more severe. So the late stage was down 45%. And that is also reflected in the number of late stage rounds, number of unicorns rounds. They were much lower than last year. And one of the reasons is, if you look at it in India, most of the late stage is actually done by global investors, which have exposure to also other countries outside India. Some of them are also crossover funds, which have exposure to the public markets in addition to the private markets. And if you look at the global sentiment, say the sentiment in US, that is more muted than you would see in India. Like you can also see it in US, a lot of people are still talking about a recession next year, while in India, that percentage is much lesser. And even in public markets, if you look at it, NASDAQ is down, whereas Nifty is probably flat YTD. So that is one of the reasons that in the late stage, you saw the impact to be more than the early stage. In the early stage, you have more domestic funds, which continue to sort of invest. Obviously, they are investing at a much slower pace than what they were investing last year, but they still continue to do deals even despite the slowdown that has happened in this year.
All right. Hi, Neha, Arundhati here. Let's get sector specific then. According to your report, enterprise applications, fintech and retail were the top performing sectors in terms of funding this year. So what's exciting about these sectors? Will this trend continue? Also, what do you think will be the hot sectors for 2023?
So that's correct. So there were some sectors which were more resilient than the others in this year. And I think in this year, there's also interesting things that you see. There are a lot more new areas that you saw funding happen despite the slowdown which is happening. For instance, fintech is one sector which continues to sort of perform. Very interesting sector, space tech, for instance, India launched its first private rocket this year. And you saw multiple companies come up and scale in this area of space tech. Even agri-tech saw companies sort of scale. EV continues to be one area of focus as well. So there are these sectors which we think will continue to sort of be exciting for investors in the next year as well.
Okay, so those are the ones that are going to be exciting next year as well. But let's talk about the big edtech sector, which saw a massive boost in 2020 now. But lately in 2022, it's been faltering. We've seen so many layoffs out there. What does the sector need to do to see that kind of growth again? What's the outlook for the edtech sector going forward?
So that's correct. EdTech is probably one of the worst hit sectors. This was also one of the sectors which had seen disproportional acceleration during COVID. And you saw a lot of companies had to do overhiring just to keep up with the increased demand that had happened during the COVID time. Now with the schools reopening, I think two things have happened. One is the new acquisition has slowed down, as well as some of the existing customers which had opted for an online method of education has now moved back to the offline channels. So because of this, you also saw a lot, this impact in the companies, and hence the companies had to do a layoff to, continue to remain sort of in the right trajectory. But even within edtech, we do see there are some sectors which were more resilient. For instance, if you look at corporate learning or continued learning, or anyone who is helping the offline system of education, like education loan companies, etc., they continue to sort of grow throughout this period as well.
Okay, all right. Perhaps we might even see more consolidation going forward in the edtech sector. But Neha, according to your report, 22 startups entered the Unicorn Club this year compared to 46 in the previous year. Investors' evaluation metrics now emphasize good profitability over growth at all costs. Tell me, will startups continue to establish clearer and more sustainable paths to grow? Is that the way forward? Also, will we see a rise in the number of unicorns next year?
So that is correct. The number of unicorn rounds were nearly half of what it was last year. And, this year you saw the late stage investors asking the companies more about the path to profitability, clear visibility on when is the likelihood that they will become profitable. And you also saw companies talk about it, that they plan to become profitable in so much, in so many years or in months. So yes, I think that the unicorn funding rounds will probably remain muted even the next year, because of the same fact that a lot of these were led by global investors like Tiger, SoftBank, which have become, whose activity have become slower than what it was in 2021. And you would see a lot more investors ask about valuations and path to profitability, especially in the late stage.
All right. Also, your report points out that Bangalore has led the maximum total fundraise, followed by Delhi, NCR, and Mumbai. So do you think this trend will continue? Will Bangalore continue to be the hub for startups in India?
So it looks like the case, and it looks like a lot of the activity, a lot of the new companies which are getting founded in Bangalore. You also saw a lot of the private market investors actually move to Bangalore in the past few years. So Bangalore continues to be a hub of activity. In addition to that, you also saw a lot of the tier 2 cities coming up, because a lot of the people had started to work remotely and move to other cities. So this year, the subsequent year, you'll also see companies come up in the tier 2 cities also.
Okay, Neha, we've completely run out of time, but many thanks for taking us through the key highlights of your report. And once again, many thanks for joining us on Startup Street today.
Thanks for having me.
And moving on, in a world where shoppers are increasingly turning to their